some more questions, and based on that we are going to understand some concepts related to your second paper of the JIB. So I think everyone is preparing well for the upcoming examination because now your exam is very nearby. So let's start with a quote that is itself saying that you are the best, you can do it, God is always with you, and today is your day. Okay, so just remind and just start just this morning with this quote. Okay, so let's start. Before to start, please just like this video and share this video to your friends so that maximum number of the students can join with us. And one update from our side, that is currently one batch is going to start from today, that is revision batch for your upcoming JIB examination. So you can just subscribe this batch. One also update from our side, that is the 3000 MCQs batch is currently running, where I am your AP faculty, and in this batch you will just get 3000 possible questions that may come in your examination. Okay, so you can subscribe both the batches if you just want to clear the examination, and you can use the code that is Y422. With this code you can avail the maximum discount. So you only have to write in the applying coupon code section, that is Y422, and you will get the maximum discount for that product. Okay, so let's start. So the first question that is based from from the ratio analysis chapter, and here you have to find out what will be the value of the current liability. Okay, while some datas are given like the debt equity ratio is given, the current ratio is given, and the current assets are value of the current assets are given here, and the long term liabilities are given here. Okay, so now the thing that I always explained you, whenever you have to solve the question of the ratio analysis, you never have to memorize the ratio analysis formulas. Okay, you only have to formulate, like in this question given, debt equity ratio. Okay, so what I explained you, that if we have to formulate the debt equity ratio, that means in the numerator side what will be the component, that would be debt, and in the denominator what it would be, that is your equity. Okay, but in accounting, because this related to your long term solvency ratio, this formula related to your long term solvency ratio, and we always recommend to analyze any company's long-term debt. Okay, so that's why instead of using the debt, we always use the long-term liabilities. Okay, so we always understand with the long-term liabilities, and it is divided by the equity, or say shareholders fund, so that is your basic formula for the debt equity ratio. So you only have to understand how you formulate the debt equity ratio. That would be your debt, and it is divided by the equity. But in accounting, because it is relating to your long-term solvency ratio, and we always prefer to analyze any company's performance with its long-term liabilities. That's why instead of using the debt, we use the long-term liabilities and the equity that relates to your shareholders fund. So now if the ratio that is given 3:1, just write here that is given 3:1. Just fare this all this stuff here. Wait, that is debt equity ratio, and that will be equal to your long-term debt, and it is divided by the shareholders fund. Fine. Okay, and this ratio is given 3:1. So just write in this way. Now the current ratio is also given, so we know that the current ratio, that is equal to your current assets, and it is divided by the current liability, while this ratio's value is given 1.5:1. Okay, now another thing that is given, the current assets value. So value of the current assets have given 45. So from this we can calculate current liabilities, isn't it? Because in this we know the current ratio and we know the current assets as well. So we formulate the, or say we can just derive the value of the current liabilities. So what will be the value of the current liabilities from here? So the current liabilities, that will be your current asset, and it is divided by the 1.5. So current asset which is given 45 and 1.5, so this value would be your 30. Okay, so what will be your current, what will be your current liabilities? So the answer that would be your 30. Okay, so from this only formula we can just derive the current liabilities. So your question, that is what will be the value of the current liabilities? So the answer that would be your third option. The current liabilities are the 30s. Okay, so how, this is how we can just solve the questions of the ratio analysis questions. Okay, now just attend the second question. Second question, which is also same, and here the only difference that you have to calculate the value of the shareholders fund. So like we understand, like debt equity ratio, that is equal to your long term debt, and again it is divided by the shareholders fund. Okay, and this ratio is given 3:1. Fine. So now just understand, if we have to calculate the this value shareholders fund, that means we have to just find out the long term debt. Now if we have to just find out the value of the shareholders fund, so how we can just solve this? This value would be what? This value would be long term debt, and it is divided by the 3. Okay. Now, what we understand by the long-term debt, or say what we understand by the long-term liabilities. Okay, like in this question, it is already given the long-term liabilities, which is 45. Okay, so if it is already given, that means just write here 45, and it is divided by the 3. So the value would be shareholders fund, that would be 50. So look how simply we can solve these kind of the questions in the exam. And one question like this you will definitely get in the exam, like where the different ratios are given and the values are given, and you have to calculate the value, like the ratio is given about that. Okay, so the answer that would be your here the 15. So this will be your the first answer here, that will be the shareholders fund. Okay, so like here in this question, long-term liabilities and all the elements already given. So this is how we solve. Now attend the another question. So another question that is related to your accounting standard. Which accounting standard is related to the recognition of the revenue arising in the course of the ordinary activities of the enterprise? Okay. So tell me the answer of this question. What will be the answer here? Which accounting standard is related to recognition of the revenue? So the correct answer that would be your accounting standard 9. So accounting standard 9, that is related to your revenues, that is related to your revenues refers, that is related to your recognition of the revenue that arising in the course of the ordinary activities of the enterprises. Okay, okay, one important thing to understand, what we understand by the revenue of any company, or say revenue of any organization. What we understand, look, revenue of any organization, that refers to total inflow of the cash, total inflow of the cash. Okay, what we understand by the inflow, that means what comes inside our organization. What comes inside our the organization, that known as a inflow, and what goes outside from our organization, that is known as your outflow. Okay, so if in the term that is revenue, so revenue refers to total inflow of the cash, that receivables, or say receivables resulting in the course of the ordinary activity of the business entity, or say enterprises. So like if I say that what is the kind of the ordinary activities of the enterprises, so like any company, just understand in very simple language, like if you are talking about any company, any organization, any business, so what exactly they do, what exactly any company, organization, business do, they actually provide goods, either goods or services. Okay, so either goods or services provided by the company, organization, or business. So meantime, if I say what will be the ordinary activities of the enterprises, so that would be just understand like sale of the goods or say sales of the products. Okay, that will be ordinary activity. Second, what kind of, that is rendering of the services. Okay, second is that is rendering of the services. And third ordinary activity, that is use of the business entity resources. Third is use of the business entity resources. Okay, so whatever the business entity resources, so that the use of the, so that all understand as the ordinary activity of the enterprises. So the important thing to understand, what we understand with the revenue, that is total inflow of the cash, cash receive, total inflow of the cash and any receivables like account receivables, bills receivables, trade receivables. That means the amount that we have to receive from our debtor, okay, to whom we just provide the goods or services. So that is from whom, like from debtor to just get the inflow of the cash. So total inflow of the cash receivables, that is understand as a revenue. Okay, so accounting standard 9, that is referred to your recognition of the revenue. I think now your accounting standard 9 is just a complete. Okay, so I think it is understandable for everyone. Now understand another question. Another question that is related to depreciation. So like in this question, you have to tell like a firm that purchase a machinery for 2 lakh rupees and it is to be depreciated by 20% at written down value method. So you have to calculate the value of the amount of the depreciation for third year. Look, whenever you have to solve any question that is related to your depreciation, okay, so you always understand question first. Like sometimes in the question that is given the amount of the depreciation, or sometimes it is given like value of the machine after depreciation. Okay, so you have to just understand the difference between these both terms. Okay, so you have to understand very well for these both terms, like what sometimes the question that will be your amount of the depreciation, and sometimes the question is value of the machine after depreciation. Okay, and both are a different thing, right? Okay, so like the question that is a firm purchase a machinery for 2 lakh rupees, that means we understand this is our total cost of the machine. So this is our total cost of the machine that is given just 2 lakh rupees, fine. And now it is to be depreciated by 20%. Just tell me what will be the answer here. Is there anyone who are just solving this question? Just tell me what will be the answer here. Look, if I'm talking about like total cost of the machine, so total cost of the machine that is given 2 lakh rupees and it is to be depreciated by 20% at written down value method. So look, in very simplest way, how we can solve these kind of the questions in the exam. So whenever you have to find out the value of the machine after first year, that means if in the first year the value is depreciated by 20%, that means now value is remaining with the 80%. Okay, that means if the value of the machine that is 2 lakh rupees, that means now after first year the value of the machine that would be your, just multiply with the 80% to the 2 lakh and you will get the value of the machine. Okay, fine. So from here you can just multiply by this way 2 lakh and this is multiplied by the 80%. Okay, say 80%. And for the another year again we have to solve the depreciation. Like look, one more important thing to understand here, whenever you have to solve any questions related to written down value method, declining balance method, or say a different name but same thing, like diminishing balance method, return down balance method, declining balance method. Okay, so in all these methods the only the same thing here, that is the constant, that is the depreciation, whatever the depreciation, like constant depreciation rate is applied, constant depreciation rate is applied, but it is applied on the previous year end value. Okay, this is very important term here, that is it will be applicable for the previous year end value. So suppose that the value of the machine, that is 2 lakh given here, and after first year the value would be this 80%. So now this 20% for the second year apply on this value. Okay, so how we can write this? We can write in this way, that is 2 lakh and it is multiplied by the 80%, and now again the value of the machine after 2 years, after the second year, that would be like this, like 80% of this value, that is previous year end value. Okay, so this is previous year starting value and this is previous year ending value, and this 20% will be applied on the previous year end value. That means now the value of the machine will be after second year, that will be your 2 lakh multiplied by the 80% and 280% of that. Okay, fine. So now because we have to calculate the amount of the depreciation for the third year, that's why we just need it for the value of the machine after the 2 year, so that we can just easily solve the amount of the depreciation for the third year. Okay, so look, in the simple term, how we can solve the question in the exam, like we have to calculate the amount of the depreciation for the third year. So we just know that value of the machine. Now we can just do in very quick way, like value of the machine after 2 years. Okay, so what will be your value? That is 2 lakh and it will be divided by the 0.80 and 0.80, which is 80%. Okay, you can also just write here, that is 4 by 5 and 4 by 5, because this 0.8 is also can be write as a 4 by 5, isn't it? And now the calculation is very much easy now, and you can just solve and you will get the value. What will be the value here? That would be 1,28,000 rupees. So this will be the value of the machine after 2 years. Now you have to calculate the depreciation for the third year. So we know that here we have to calculate the amount of the depreciation. So amount of the depreciation, that would be your 1,28,000 and 20% of that. So the value, what will be the value here? That will be your 25,600, isn't it? Okay. And suppose that if you have to calculate the value of the machine after third year, suppose that we have to calculate the value of the machine after third year. So what we have to do here? We have to simply just write here 2 lakh and multiplied by the 0.8, 0.8 and 0.8. And this will be your the total value of the machine after third year in the very simplest way. I think it is understandable for everyone. Now just do the another question, that is if Mr. X purchased goods from ABC Limited of 30,000 rupees on credit. So what will be the debit and credit entry for this transaction? Okay, so look, how we will make the debit and credit entry, like I always explained. First thing, you have to always understand what kind of, or say which possibly accounts can be possibly included in the particular transaction. Okay, so like in this question, if we are going to see like Mr. X purchased goods from ABC Limited. Suppose that this is your Mr. X and this is a company, that is ABC Limited. Okay, so Mr. X just purchasing the goods from ABC Limited, and that goods on the credit, and for 30,000 rupees. Okay, fine. So what will be the debit and credit entry for that? So now we can easily just recognizing that one account, that would be your purchase account, and another account, that will be your ABC Limited account. That means that company account. So we can also write that is ABC account. So that the recognition step, how we can just recognize. Second step you have to follow, like you have to just categorize that this account will be which account, this account belongs to which account category. Okay, so suppose that if you're talking about the purchases, so purchases always represent in an organization, that is your expenses. Okay, isn't it? Purchases always denotes your expenses, and expenses that always just included in which account category? That is nominal account category. Okay, so in nominal account category, the second step, that is you have to just categorize where you have to just put the account in which account category. So the purchase account that belongs to your expenses, and expenses that comes in your nominal account, because in the gold from the golden rule of accounting says that all the expenses, gains, income, losses all comes under the nominal account category. Okay, and also says that is debit all the expenses. So golden rule of accounting for the nominal account says debit all the expenses. So here that is purchase is an expense, so that's debit, just debit this. Okay, another one that is ABC account, and this account belongs to your artificial, this belongs to your artificial personal account. An artificial personal account, so for golden rule of accounting for personal account says what, debit the receiver and credit the giver. So those who are receiving just debit the account of them, so the just debit the receiver and credit the giver for the personal account. Okay, so this belongs to your artificial personal account, so that's why in this particular transaction the ABC limited is actually just giving. Okay, so that's why the ABC account should be credited here. So how we will make the debit and credit transaction look? In very simplest way, just write here that is purchase account, and to which account? To ABC account. Fine. And how we will make the debit and credit transactions of that? Like purchase account, 30,000 rupees should be debited, while ABC account should be credited. So this is how we just make the debit and credit of the particular transactions. Okay. I hope it is clear for everyone. So that would be your answer here. So that's all for this session. I hope you all guys enjoyed this session, and the very best wishes for your preparation too. And if you're liking our effort, please do not forget to hit the like button on this video. And if you are not downloaded the Adda 247 application, just download this and subscribe the Officers Adda 247 YouTube channel so that you can get the notifications of the live lectures as well as the notifications of the important news that is related to your exam. Okay, so thank you for watching me here. Thanks for joining me here, and like this video and share this video to your friends. So now we will meet on tomorrow at the same time at 6:30 am.